Hi guys, my name is Victor Gundele and I welcome you again to one of my content. And today we want to discuss one important concept in financial modeling. And what that is what we call depreciation in financial modeling. Now, this concept is very, very important. Not even Excel input wise, but in a typical real business practice. And we know that financial modeling is very, very practical. It is what we do every day. It is applicable in every business operations, right? And now, this depreciation, you as a modeler, you as a financial analyst, you really need to understand it. I've seen investment being rejected because depreciation was not modeled correctly, was not modeled in a realistic manner. Now, let's take a look at it. Because there's no way we'll discuss depreciation that we will not discuss something we call capital expenditure, or what we call our typical non-current current assets. How do we treat this whenever we are building our models? How do we also make this realistic? So let me get started and let me create something called assumptions, and let's see the appropriate approach. Now, not just about the approach, because it's a model. It's all about garbage in, garbage out, input, calculation, and you have your output. So which means you need to understand the concept yourself clearly, right? So let's assume we have assumptions here. So I have assumptions. Let me move it to this column. Okay, yes. Don't mind me. I really love being professional whenever I'm building my model. So the design and all those things, I always make sure they are always on point. So let's assume company A, right? Plan. Let's say the plan to purchase, or is it purchase? Okay, the plan to buy a motor vehicle. So the plan to get a motor vehicle, right? What's USD? So let's assume it could be multiple vehicles, all right? Because they definitely need it for their distribution, for their business distribution, or for their product distribution. Right now, the best way for you to approach a typical financial model business case, right, is to think. So it's the same way accountants they treat a typical normal transaction like this. So which means, as you as a modeler, you think also the same way. The truth is, we are not recreating anything. It's just the normal way accountants would have posted this if they are preparing their financial statement. It's the same thing we are also doing as well when it comes to financial forecast. As I said, historically, accountants, then future-wise, that's where the financial modeler comes into play. But it's not as if we are creating anything different, right? So now, let me create a financial statement. So let's create a financial statement.